Roughly 50% of people that complete their own Cover California applications make mistakes that either cost them a subsidy or they get a huge subsidy and they have to pay it back next April, which is a nightmare. We've seen bills for thousands of dollars when they file taxes. A big source of this confusion is around income. Cover California and income. We're going to go through the biggest mistakes we see to help you, knowing that you can reach out to us and we can do all this for you to make sure it's seamless and easy. But let's dive right into the biggest income mistakes we see with Cover California in this video. The first issue we see around income in Cover California is what income are they asking for? The best way to look at this is we're trying to estimate the AGI, the adjusted gross income for next April's tax filing, meaning for this year that we're getting insurance in. So usually that's broken down to a couple key pieces. You have W-2 income, which is you're on payroll, you're getting paid by a company, and you want your gross number there, unfortunately, before taxes. So if you make $2,000 a month, and that's your gross income on a W-2, you would use $2,000 as a basis for that income on Cover California. Self-employment's trickier. Self-employment is your net business income, meaning if you're 1099 or self-employed, then which is S corp, a sole proprietorship, all the different manifestations, LLC member, then you're going to take your net business income. And what that means is you take your gross business income and take out your business deductions. You can't take out taxes, unfortunately, and you can't take out other things you itemize or write off. But your business deductions that bring down that gross, that's what we want to take a hold of. For example, if you're an Uber driver, you make $50K, but you have $20K of expenses around the car, gas, all the things to run the business, your net business would be $30K. Just a little secret here, health insurance premium is generally 100% deductible if you're self-employed, and as long as you have enough income to cover that deduction. That's a huge deduction right off the bat, and we can help you with that piece. Most people don't realize that. Then you have rental income, which is usually net rental, meaning after you take off expenses associated with that rental income, capital gains that you're going to get within that year. So sale of stock, interest, dividends, things like that. The only things that are added to these core or to that AGI to make it what's called MAGI is untaxed Social Security. It's untaxed interest, which is usually local bonds or state bonds. And then finally, foreign income. These are rare. So usually people can look at their AGI and get a good sense of what they should put down on that. If your situation is complicated, definitely reach out to us. And the way we put this in the system is really important as well. And we're going to talk about that in a later point. Now let's talk about another key piece, which is what period of income are we looking at and for who? Whose income? Cover California's definition of household, and this confuses a lot of people, a lot of mistakes around this, is everyone that files together on a 1040 tax form for the period in question. Meaning, I'm sitting here June 2025. If I'm trying to estimate my income or whose income, I'm going to look at this year, meaning April 2026's tax filing. Who's going to be on that 1040? It doesn't matter who you live with. It doesn't matter if they're in the same house with you or if they're in another location. We see adult children who are at college, but they're still claimed on the taxes of the family. That's who we're trying to include. The income tied with that 1040 tax form and everyone on it. And when we do the account, we want to make sure everyone's in the account, even if not enrolling. That's another big mistake we see. So everyone on the 1040, enrolling or not, that income, that's what we're looking at for the calculation. Then finally, what period of time? A lot of people will look at last year and be like, oh, my taxes I filed because they just did it in April. It was $50K. Last year's done. It's over. Ancient history in terms of Cover California. They do not care. You can make $30K last year and $100,000 expected for this year. you have to go based on the 100,000. If you go based on the 30, you're going to end up paying a ton of subsidy back when you file taxes because they're looking at this year's income. So I'm sitting here in May 2025. I want to try to estimate my AGI on the April 2026 tax filing. I don't care about last year, the year before, does not matter. So now we know who, we know what period of time. Let's look at a couple other key mistakes we see, and then we'll go forward into the final piece, which is really helpful. Another key mistake we see around Income Cover California is this. People try to go through an exact kind of itemized view of their income, meaning they'll be like, oh, January to May, I made $50,000. I'm going to take a month off and then I'll make income starting in July. And if they're enrolling in June and they put their current monthly income, or they put that prior income ended in May, boom, they're going to get dumped into Medi-Cal. And the problem with that is Medi-Cal is then going to take 30 to 40 days to come back and say, hey, you weren't eligible for this, or you're eligible for the 1 month, and then we're going to kick you off because you have new income coming in July. To avoid a lot of this, we usually say do an annual estimate for the year. Now, if you get a standard income every month, $2,000 a month for an individual, fine, that's easy. Put that in, you're good to go. I would still put it as an annual estimate of $24K versus a monthly of $2,000. However, if your income is all over the place, you get chunks of it, you're seasonal, it moves around, unless you want Medi-Cal during those off months, and it's kind of a process going in and out of Medi-Cal, just a heads up, we recommend looking at an annual period of time. And we can help you structure this in such a way that it's smooth and you avoid this in and out, in and out, in and out, because unfortunately, when you call into Medi-Cal, depending on the area you're in, it can be an hour-long call. And you may have to do this over and over and over again. And we get calls all the time of people who are kind of stuck in that process. Reach out to us, delegate us as your agent, and we can help you with the existing account. But think annualized, and that makes things a lot easier. And more importantly, for making changes later. Let's say I go in with 30K income and it's now going to be 50K. It's so much easier to update that 30 to 50 than to go through and try to itemize each individual piece. My hourly is now this. Again, if you know what your income estimate is, and now you do after watching this video, or at least most of it, and we'll talk about that, then try to think annual when you're doing that to avoid those issues of getting up and down. Now, two more key pieces or areas we're going to cover, and these are big ticket items we hear from people every day. All right, before we wrap this up, for something that can literally save you thousands or cost you thousands, understand we can't cover everything in this one video. We can give you 60, 70% of the blueprint, but everyone's income is so complicated. Reach out to us individually. There's no cost for assistance. We are certified Cover California agents. We have enrolled thousands of people. Check out our Google reviews on what we bring to the table for people. But that way we dial in your situation correctly so you get the most subsidy, the richest plans available to you, and you avoid nasty, nasty hiccups where the IRS is knocking on your door for $5,000, $6,000 come next April. Let's talk about the final piece here, and then we'll leave any other questions for us directly. We're going to talk about two gotchas we see all the time. One has to do around the Medi-Cal threshold for income. There is a different threshold for children under 19 to qualify for Medi-Cal than there are adults. And what we see all the time is what's called a split household, where the adults get a Cover California plan, full networks, rich, probably silver plans, depending on their income level, and the kids are getting Medi-Cal. And the issue we see is a lot of times the doctors for the kids don't work with Medi-Cal. The parents are freaking out. They don't know what happened because they got split up. And it can be a nightmare addressing that and unhooking that and fixing it. That's a whole nother topic and video. If you find yourself in that situation, reach out to us. But more importantly, before you fall into that, let's touch base on the income, dial that in correctly to reflect your accurate income estimate, and see if we can avoid that altogether. if it's something you want to do. We can always get the kids a standalone plan, but without a subsidy and without the richer silver plans if they qualify for Medi-Cal and that doesn't work with their doctors. To avoid all that, let's touch base and make sure we understand the income piece correctly. The other error we see is around this. It's not so much an error, but changes in family can blow things apart. So we'll have situations where someone was getting a huge subsidy, maybe making $25K. They get married mid-year, and that other spouse is making $200K or $100,000. They don't do anything, make any changes. They continue along. Come tax time, boom, they're married. So if you're married filing separately, you get no subsidy. If you're married filing jointly, now they're looking at the entire household income for both partners, even though the marriage was July. The marriage could have been December 1st. It doesn't matter. It's your status as of December 31st. And if you're married, now in that next tax filing, they're going to look at household income. To get a subsidy, we have to be filing jointly. And if you didn't adjust the income or correct the accounts, meaning put them together, which we can help you with, then you may be in for a nasty surprise at tax time. And we see that all the time. We're May, June, just coming out of tax period, and we get calls all the time of, oh, I just got a bill for $14K. We can help you avoid all of that. Reach out to us for marriages, divorces, newborns, anything that's changing the size of your household or the makeup of your household. Let's wrap our heads around that and make sure we don't get caught either with a nasty penalty or not getting everything we're eligible for. That's a wrap on Cover California and Income. Reach out to us with your specific situations, and we can dial that in within 5 to 10 minutes to make it so much easier. If you stuck around this long, thank you. We appreciate it. You probably have more questions. Reach out to us. There's zero cost for assistance. You can call, email, chat, or best yet, book a time, and we can go through your personal situation to address any questions regarding California health insurance. Because a lot of sources out there are nationwide, and California is really unique. We need to go through the specifics of your situation in your area to find the best options. We don't push. We don't try to sell anything. We answer questions. And if you look at our Google reviews, you'll see that reflected in how we deal with this. We're happy to help. Reach out to us and do us a big favor. If you could like and subscribe below, that's fantastic so we can keep bringing this information to California.